Welcome. I hope you had an excellent session yesterday. We're starting a new day today. I will take you through a topic of improving success rates in exploration. I don't know if some of you have been thinking about this before, but I spend most of my time actually thinking about this aspect. The clicky is maybe not working. It is. Perfect. I'm a geologist, but I'm also a portfolio manager. I've been working in exploration for over 10 years right now, both in mining industry and oil and gas exploration. I will share some of the learnings from both industries today. I do have successful track record both as geologist on the ground and as investor in the sector, and I hope I can share some of the learnings. Equivest, we started a couple of years ago, and our vision really from the start was to enable consistent profit and focus on the word consistent, as the sector can be volatile, and from significant resource discoveries. And this is what we focused in our portfolio management strategy. Today's talk will focus on underlying exploration trends. There is a baseline that we have to establish that we operate in. So there are some important aspects that we have to keep in mind both as investors and exploration companies. And I will actually share some of the learnings from assessing over 500 exploration companies over the last 2 years. Some of them were assessed very quickly. Some of it is based on actually talking one-on-one to geologists as well, to CEOs, and understanding how companies operate. And we're starting with a statistic that you maybe all know about. Maybe for some of you it's a first-time experience. But success rates in mineral exploration are unfortunately pretty bad. So 1 out of 1,000 projects becomes a mine, and it's a baseline that we have to operate in. And what I try to think about how we can actually improve this success rates. And I just want to contrast that with what are success rates in oil and gas exploration, as they are significantly higher. It's 1 out of 3 exploration wells that results in commercial discovery. And as I mentioned, I worked across both industries, and it's been an experience for me moving from mining exploration to oil and gas and back again. And I see there is a lot of learnings that can be taken out. But the key question is like, what is causing this difference? Is it the data? Is it the geology that the deposits are distributed differently in oil and gas exploration versus the mining exploration? Is it the processes? So there's a lot of questions you can ask yourself, what is causing this difference? And we'll touch upon some of them today. And maybe when you saw that statistic, you're thinking, why should I even invest in exploration, as you have to outcompete quite terrible odds. But you probably are here also as you experience some great returns in this sector. And we all know that when the significant discoveries are made, the returns can be quite significant, several times, up to 20, 30 times returns on the investment. And there's significant value creation when you have a project that is basically a plot of land and there is major discovery made on that property. And that's something that attracted me to the sector as well 10 years ago. It was the thrill of making these discoveries. And both as geologists and investors, I really try to think, how do we crack the code of being more successful in this sector? And there's another trend that is in our favor, is the long-term exploration cycle. We came out from the bust part of the cycle, and we're moving into the boom part of the cycle. It's good to be investor, and it's good to be exploration company when you are in that part. I have started my career in 2011, 2012, and that was an excellent experience at the start. Had a fantastic career, but things turned out very quickly when the cycle topped. And it's good to experience both the good times and the bad times and learn how to operate in this industry. But we all hear more and more that there's shortage of ready-to-be-developed projects. I think this applies for almost any commodity that we're looking at. And significant money flow will be needed into industry to replenish that supply. I think this especially applies to the battery metals space that maybe some of you are moving in, copper, nickel, lithium projects. And what we have on the graph, I just wonder, do we have a pointer? No, okay. So what we have on the graph, we have a y-axis showing number of discoveries made per year over the last 100 years, pretty much. And what we see is the sort of 1960s to 2000 was pretty stable, with approximately 75 discoveries made per year. And the period of 2000 to 2012 looks fantastic on this chart. There was a significant increase in the amount of discoveries being made. But unfortunately, when it comes to money flow, it's a little bit more disappointing story. So on average, between 1970s and 2000s, $5 billion was invested into exploration. And during the period of 2000 to 2012, previous boom, on average was $20 billion per year, and it topped at almost $40 billion in 2012. And what we saw is more or less doubling of discovery success rates, but the money flows have been significantly higher. So for amount of money spent, we didn't get the same results as in 1970s to 2000s. And I remember myself back in 2012, 2013, attending conferences. The key message, and as I'm working in the companies, was that we're really struggling as an industry to find large economic deposits. It's getting more difficult. We have to use different techniques. We have to go deeper. We have to go undercover. I think what we will see in this cycle is that this will become even bigger topic that we need to challenge how we do exploration. But again, as an investor in an exploration company, being in that part of the cycle when the money starts flowing again, it helps you to de-risk some of your more risky assets in portfolio, as well as exploration company to maybe spend more on R&D and spend more challenging how you do exploration. And when we see this baseline, the discovery rates, the money flow that are positive, we really need to, as an investor, exploration company, build a process to beat these base rates, especially this 1 out of 1,000 projects. You need to develop some sort of system that outcompetes that statistic. And I'll start with investor assessment process. So when investors look at exploration company, what I see, and I talk to a lot of investors, you can actually follow me on Twitter as well. I do communicate quite a lot about exploration. Investors are actually really good at assessing management and understanding who are the people behind the project and judging those skills. What they are also good at is the exploration cycle, so sort of knowing what commodities the money will flow, understanding those dynamics. Where investors struggle, and you probably know it yourself, is, I think, assessing exploration team. Exploration team often is not accessible to investor. You maybe end up just talking to a CEO, and you don't really know who are the people walking the property, exploring, and how they're going about this process. Another aspect is also knowing whether the properties are good or bad. Are you actually going to make tier 1 discoveries on those properties? It's very difficult to judge these aspects. And I think the most common aspect that I hear the problem is the technical press releases. There's a lot of jargon, there's a lot of geological words in there, and it's not really easy to understand technical press releases, and most of them are also highlighted as successful even when they are not. So that part is definitely challenging, and I focus on these 3 bottom aspects quite a lot on my Twitter channel if you want to learn more. And we basically assessed over 500 exploration companies within the last 2 years. And there's some important learnings both for exploration companies and investors. So if you're an exploration company, you can think about how you can improve your process, how you can improve also your communication to the market based on the next slides. As investors, you can think what kind of questions you should be asking. One thing that we see is there's a lot of focus on historical mineral occurrences. I actually help companies acquire properties, and most of the time I get asked to stake properties that already have historical mineral occurrences on them because it's just very easy. And what we see on the right side is a geology map of Australia, just some random snapshot of it. And there's various geological features, but you have these yellow dots, and these yellow dots are gold occurrences. And properties that have those gold occurrences on the map, I cannot point out right now, we would basically expect companies to apply for those properties. And I can confirm to you that most of this acreage is already staked, which is not surprising. But what we're missing is maybe a big picture. So companies and geologists actually asking themselves the question, why this location will produce $1 billion plus discovery? Why will we have tier 1 discovery on this property? And to do that, we actually have to step out and think about what are important geological controls that will create this discoveries in the certain location and go after those locations that we think are prospective, not just chase mineral occurrences. And when it comes to big picture, we talk about deposit models. You maybe heard this word before. And it's basically the same set of geological criteria that occurs in different geographic location, and it leads to formation of economic deposit. And in a simple way, you can think about it as a recipe. I like to talk about baking bread. So when you're going to bake bread, you have pretty much same set of ingredients in Europe and in Canada. You would bake bread in the same way. And there might be some slight variations, but the key elements will be the same: the heat, the butter, the flour, and so on. And the same applies to mineral deposits. It's the same set of criteria that we're looking for. So if I'm going to go explore in Africa for gold deposits, I will be looking for the same set of criteria as in Canada. And you might think this is very simple, but unfortunately, it's not often applied in the exploration companies, and there's a lot of focus on these mineral occurrences. And as geologists, we don't actually have a full understanding of these deposit models. There's a lot of controversy, there's a lot of disagreements, but I spent a couple of last months going through some of the recent work that is coming out actually of academia and research institutions, and it's been a lot of great work done in the last years, and we're starting to learn more and more. And what this map shows is basically a globe, and the red colors are the areas where the lithosphere is very thin. Lithosphere is the external part of the Earth, so the hard shell of the Earth. And we can see some places is 50, 100 kilometers, and the blue areas, it's where it's very thick. And what we're really interested in is this white line that you see, the white contour. I cannot point out again, but if you follow this white contour, you will see that there is a lot of mineral occurrences, and the bigger they are, the more economic deposit is. And we're looking here at lead, zinc, and sedimentary copper deposits. And what tends to happen if you look at Australia, if you look at Africa, even Europe and Canada, the large ones tend to follow these white contours, which is, seems to be important control. And that white contour is actually 170 kilometer thick lithosphere. And there's good geological explanations why we actually see large deposits forming along this boundary. And what was interesting, this paper was actually published in 2020 in Nature Geoscience, and the work was done in Harvard University. And I was like, this is not a university. I would expect to start working on exploration. But I think there is a lot of interesting change happening. And what they basically concluded that all significant 10 million ton plus contained copper, zinc, and lead sedimentary hosted deposit occur within sort of 200 kilometer corridor, so this white line above this 170 kilometer contour. So it cuts off huge amounts of earth that you would not spend your time exploring for this type of deposits. And copper sedimentary deposits are actually some of the deposits that are less explored, and a lot of people think that these are the deposits we'll be targeting in the next years to get more copper as the porphyries are getting basically lower grade. Another aspect that is also helping us with generating the maps like you've seen before is the big data. And maybe you came across already exploration companies doing this work internally, or AI startups as well. We have those cobalt metals, but there's a lot of small companies popping out in the sector. And I personally don't believe this will produce a silver bullet, but as geologists, I'm super excited to get my hands on these tools as they speed up the work and they put big picture in perspective. You're basically able to throw a lot of technical data in and sort of cross-filter it, examine it, run some machine learning models on it, and get some answers. And this data is helping us both in generating new targets, but it's also helping us to understand this deposit model better because we're starting to get global statistics on them. And what we have here on the right, it's actually a map that is freely available, made by Geoscience Australia in 2016. And the red colors are the areas where you would go and expect to find nickel deposits. So these are the areas where series of geological circumstances is favorable for generation of those deposits. The blue areas are the areas where you would not go search for nickel. I can tell you that there's a lot of exploration companies that is searching for nickel in these areas, unfortunately. And very interesting thing, if you look at the left corner of that map, the bottom left corner, you will see this star with a Julimar. Julimar has been a significant discovery made in 2020. I think the valuation is $1 billion plus Australian dollars. And this map was actually done in 2016. So the area that it's located in this red-orange colors, has been very poorly explored for nickel. And this is actually where we found significant discovery just a couple of years later. So it shows these products are actually very helpful in going out and exploring. I'm definitely looking to the northern corner where there is several very significant anomalies, and there's very little exploration in these areas. So they are definitely interesting areas to focus on. Another aspect that I think as investors you should be asking, or I also know that managers, CEOs, and board members struggle with this aspect, is when exploration teams go and drill exploration targets, they don't really communicate what is the size of the target that they are expecting to find. And what you would like to see is sort of a range of possible outcomes, as it's never sort of is going to be 10 million tons at 1% copper. That's unfortunately not possible to predict. But you could have a range that is between 1 to 10 million tons, between 1 to 2% copper. And this is actually an integral practice in oil exploration. So when I mentioned to you the success rates difference, there is not a single investment decision done in an exploration company in oil industry when these numbers have to be provided, basically. And they have to go through quite significant process to be assessed consistently across various projects. And I've seen actually when I looked at this 500 exploration companies, I came across 2 that are taking this process into mineral exploration. So it's really interesting to see that it's slowly moving. I talked to those individuals and they actually said they were inspired by oil and gas industry and these practices. So it's very interesting to see we slowly moving in the right direction. And I'm also helping one of the companies to establish the system as the board and managers struggle to make decisions basically on what to drill.
Joanna, can I jump in real quick?
Yeah.
I've had the discussion where I would have asked you later, but since you've been looking at me for a second, and I've been thinking about this compliance. When you offer those targets, I keep going the wrong way when I see that.
Yeah.
Do you have a thought on compliance in that regard?
Yeah, I think this is a good question because you can produce a huge number and sort of sell it to the market. But I think this is where the range is important, and also having the process to assess it is important. So in the oil and gas industry, there's a process you have to follow. So it's sort of calibrated by existing way you would do these processes. So I think you would have to have some sort of system in the mining industry as well that keeps you in check, that you're not just blowing up this number.
Right? So 100 million ounce resource target has been projected before.
And the one number, I'm impressed that they're confident is going to be that number. I think another aspect that is, I think, too much to ask at this stage, but I just want to highlight it. In mining industry, we don't have probability of discovery number when we drill. And again, this is integral number in oil and gas exploration. When you're going out and drilling a well, you would do assessment what would be a probability at this location. It will not necessarily work on this one prospect, but it will work across your portfolio when you do the job right. So what we would like to see is maybe there's 10% probability to find at least this 1 million tons at 1% copper here. But I think with the success rates that we're having, it will take some time before we can start seeing these numbers on the presentations. And just to show you what it looks like in oil and gas industry, this is just a sample prospect from a public presentation. And you have basically 250 million barrels that they're expecting to find with the upside of 470. And the COS, the chance of success, is 25% at that location, basically. So it's just a simple set of numbers, but there's actually quite thorough process to produce those numbers that is behind. And the third one, that this is some of the guidance that you can also use as investors to ask companies questions. And also as a mining exploration company, you could consider maybe putting them in your presentation. I feel like they're usually missing. Or also, CEOs, managers maybe want to ask these questions to their exploration teams as well. And what I see a lot of companies is very good at communicating their business model, but not very clear on exploration strategy. And we can start with the first question. It's why here? Why are we actually exploring in this location? What is unique about geology? And what will make it to host a Tier 1, Tier 2 deposit? I think also CEOs should ask that question to their exploration teams, ask them why they actually believe it's in this location. Another aspect is the deposit models. So not many companies sort of has this one slide that explains this is what we're targeting, this is what it looks like, simplifying it for investors. And what are the important elements that need to be in place for this deposit to be found on your property and be of a large enough size. Another aspect is what techniques are applied to exploration, and that's both technology but also processes, how companies go about exploration. And I talked to various exploration companies yesterday, and there's definitely a difference in how companies run their exploration process. And another important question, if there has been already other explorers on that property, what is company doing differently? Because a lot of times I see it's the same workflows that are repeated on the same property, and then we know the answer is going to be most likely no. And another aspect is, why is your team the winning one? So a lot of presentations and communication focuses on the management team. I absolutely believe management team is key, and you have to have right people in place. But the people that are actually going to make discovery is the exploration team that is behind the scene. They are the ones that are walking the ground, looking at the data, and trying to bring this project forward. And I think this team is usually very behind the scene, and there's only a few companies that sort of bring this team forward, tell them who they are, what makes them special. And when I access companies, this is one of the critical factors. As geologists especially, I want to know who are the geologists that are doing this work and what kind of questions they are asking. And if you want to learn more, you can reach out, and you can also follow me on Twitter channel, basically. Any questions?
Oh yeah, you know what? Let me come up and I have a few questions for you as well, but Gary, why don't you start us off?
For me as an investor, that was an excellent presentation. Thank you very much for that.
Thank you.
My question is, you showed right at the beginning this ratio 1 to 1,000. From your experience in the past, attending conferences like this, if we skip the already producing companies, just looking at the exploration stories, what is your feeling for the ratio that you see at conferences like these?
It's a very good question. I don't have an answer. I think there's a lot of good companies here as well. But it's actually something that I want to test on selected area, maybe one region, and see what was the outcome from smaller exploration companies. Because what these numbers include, it's a lot of them, it comes from Rio Tinto, BHP, and it's based on their evaluation of entire sector plus their own exploration. So unfortunately, I don't know 100%.
Do we have any more questions? Because I have a few. Oh,
I have a question on your last point. Exploration team. You usually see a lot of faces, a lot of names on these presentations. Most of the names, most of the faces don't tell me anything.
Yeah.
So what are you actually looking at in this team? How much they have found in the last, whatever, 10 years, 30 years, whatever, or what are the key aspects you are looking for?
I mean, the discovery track record, of course, that helps. But then it's important to find out if people were actually behind the discovery. Because myself, being part of discoveries, what I found is 30 or 40 people is part of discovery suddenly, where maybe the key people were 3 or 4. So that's something that I would ask, and I would always ask some questions, how did you come across this discovery? What was the big impact that you made? I think the person that made discovery really can talk about it for hours, basically. And it's actually the same question that I listened recently. Elon Musk asked people, like, explain how you solved that problem and how you made an impact. And another aspect, there's actually a lot of aspects you can look at in exploration team. I look for a drive and a passion. You have to go against many failures, drilling failures, project failures, and you can't fall in love with those prospects. You need to just sort of move through your portfolio consistently, apply the right process, and keep positive mindset as well. And have that drive to put the boots, go into the ground, sit in the evening, look at the data, and really crack that code. It's not many people that can do that.
It's a very good question, actually, you asked, because I wrote it down as well. Like, how do you rank a geologist? Okay, like, we don't have a ranking system.
Yeah.
And as you said, 40 people claim they discovered something. Like, Fruta del Norte was 50 people, I'm sure,
Yeah.
right? But how do you know who actually put the drill, which direction to drill? There's probably 2 people.
Yeah, but
right?
just really ask them how they contributed to it, what was the impact, what was difficult, what they had to overcome. Yeah. These are some of the aspects that I could talk about for hours about my discovery.
No, fantastic presentation, Joanna. I'm going to throw some of the questions you put on Twitter back at you.
Okay.
Okay, you've put out some really cool questions on Twitter, on your Twitter account, and one of the questions is, which probably takes a minute to answer, is what are some of the biggest bottlenecks in exploration right now?
I think definitely people shortage. We'll see it in the next years. If you actually go on Google Trends and you search geology or geologist, it looks like that, declining slope. And as an industry, we've not been really good at maintaining people in the industry. I myself been hired, offer a jet life lifestyle, and been fired after a few years because of the bust cycle. And that applies both to oil and gas and mining exploration. We just don't retain talent, and you have to toughen up and go through the cycles yourself if you want to really explore. I think other aspect is, what I mentioned, is getting more difficult to make discoveries. It's already been a topic of the last decade, and I think we have to look at these problems, the discovery rates. We should actually put more effort to quantify it, see if there's better areas, if there's worse areas, if it's easier with some commodities or others, and what are the underlying causes for those problems and how we improve them. I think a lot of it's happening in sort of academia, especially Australia is doing a lot of work in this aspect, bringing the big data as well. They track quite a lot of results on the individual drill holes as well. But I don't see all of this sort of moving into junior mining companies. It's not easy to be sort of small and agile, do everything, and apply all these new learnings as well.
New learning is a good point. My next question is including AI and big data into junior exploration. How much sense does it make? How effective is it? And how do you control the data you're actually putting in?
Yeah, so a lot of geologists is actually like, oh, I don't want it because the catch line is going to replace geologist, and you don't want to hear that it's going to replace you. I personally love it, as it just brings all the data that I would have to sit and look at for 5 years, maybe it brings me that data in 5 to 10 minutes. Of course, there's countries where it's easier to do that work because the data is already in a good state. There is countries where the data is on paper and you have to go through that struggle. So I think it's also, we will see maybe Canada, we will see Australia doing better than, let's say, Africa in this respect. But I personally believe it's invaluable. It makes your process faster. It makes you see the big picture and ask more right questions. But it's definitely not a silver bullet, and I would not sort of trust like there's a blob here that's been generated by AI. I'm just going to go and drill it. But it's a useful tool to ask the questions. And
you can breathe easy, Jody. It's okay. Okay. You're okay. No, fantastic. Maybe last question as well. Do you have any other questions from the audience? Oh, Graham, right? Yeah.
All this historic drilling actually is fairly valuable and can lead to something. Is it possible to, when you're looking at stuff, to be able to quickly or through research, looking at it, determine that? Because it's hard for me as a retail investor.
Yeah. Yeah, I understand what you mean, and I think the easiness of that varies on jurisdiction. So some jurisdictions you actually have geoscience portals that have all the data that companies are using as well. So you maybe are able to see how much even drilling was on the property. And one thing I normally do to test is I try to ask the company about the exploration history of that property, ask them how they do things differently, and then I will actually go and check myself that data. And sometimes I challenge them, like you said that there was just 5 drill holes on that property, but here it's 40 and looks like all the targets you're going to test been tested. So what's the new catch, basically? So you can use some of these databases to help you, but that's sort of another step you have to take. And just researching, asking the questions, again, it can help.
It's tricky because I've seen a company just recently completely wiped their website and presentation of historical results when they announced the discovery.
Yeah. Oh, there is this, I don't remember the address, but you can go online and see all the historical versions of the websites. I actually found this useful.
That helps. We got 2 minutes left. Do you have any more questions from the audience? Because I have one that might take 2 minutes to answer. Okay.
Maybe,
yeah, Pete, go ahead.
If you can rank the metals in how easy it is to discover and how hard it is, like I hear always the holy grail that every CEO wants to find is
Gold?
the nickel sulfide.
It's nickel sulfide.
Okay.
It's really hard to find, and is gold the easiest one, or how do you rank it?
The easiest one is lithium. I think we're seeing it already from exploration results. It's actually, I didn't do the numbers, I would like to have time to crunch the numbers, but we're seeing huge amount of discoveries from sort of medium to large sites coming out from lithium drilling. So, and lithium is quite abundant, and exploration is not that difficult actually. So I think we're seeing quite a lot of coming out. And second, and then there's various commodities. I would say gold is somewhere in between. But the most difficult, as you mentioned, is nickel. I think that's what makes those stock prices shoot up. I'm probably biased because I started in nickel exploration with Anglo American, and we had a fantastic nickel department, so I love nickel exploration. And but it is really tricky. You know, when you see companies putting out, oh, we have this electromagnetic target, it's going to be new nickel discovery. You have to be in the right place, and then maybe you have to drill 50 of those, and then you're going to start hitting something. So it's not going to take just 1 or 2 holes. We've seen it drilling as well in Anglo American. It took many holes to start hitting some of those really good targets. So it's a lot of patience there. And yeah, maybe better technology one day.
Fantastic. Joanna, thank you so much. Super insightful. Really appreciate your time. Thanks for coming out.
Thank you.